Hey, welcome to the weekly stock review. Goal of this channel is to uncover the world's best stocks that have 100x potential. My name's Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm aiming to share the lessons along the way. So today, pretty much, I'm going to go through the 21 stocks that I've reviewed this week and give you guys a list out of my take from them. So my process is 5 steps: where to look, 5-minute check of that stock is pretty much what we've done this week on these 21 stocks. Next step for me is to pick out a couple of those ones and do my homework on, come up with some valuations, and then make some portfolio decisions. Now, these are the guys that I've learnt from. They've done pretty well for themselves, and so by following the breadcrumbs that they've left in their many reports and annual letters, can hopefully follow in their footsteps and achieve some of that success as well. So let's jump in and have a look at these stocks. So I'm going to go through and pick out one for a marry one, a kill one, and a fuck one. And so marry one, which one out of these picks is going to be the most interesting for the long term? Which one is going to be killed? Which one's going to be the worst investments out of these ones and that I want to stay as far away from as possible, at least for the time being? And which one is a short-term play, one that's going to be nice to jump in with it for the time being? So from earlier this week, the ones that pretty much I think we're going to want to kill is 2 of them. So a bit controversial, but this week Aston Martin that I reviewed is not looking very healthy at all, and it looks like the worst companies, like financially and the direction the business is going. And the next one is probably the controversial take, is Aduro Clean Technologies. Why is that? Well, at this stage the business is very overvalued, and the majority of shareholders that are in it at the moment are pricing it that nothing can go wrong and that everything's perfect. Now, how long is it actually going to take for that business to be priced and valued at what it's currently priced at? Probably a decade or 2. And what that means is the guys that have invested and bought at that share price, they're not going to get any real increase over the next 10 to 20 years. Short term, over 6, 12 months, in those kind of periods, the stock price will be very speculative as more and more information comes out about Aduro, whether it's making advances in its technology, commercializing it, bringing it to market, and getting feedback from its customers and things like that. But up until the stage that they reach profitability and whether they're having growth in the marketplace, that's the time where I would be looking at either getting involved with it or not. There's a lot of risk in it, and there's a lot of things that can go wrong, so it's completely speculative at the moment. It's not something you'd want to have a large portion of your portfolio on. Definitely can dip your toe in and buy a small portion. It might be like 1-2% of your whole portfolio, but as long as you're happy with that amount going to zero, then that's what I would say. So which one am I going to marry? Today I reviewed Amazon, Google, and Apple. Those 2, Google and Apple, are yet to come out, just later on today. But the one that I liked the most was Amazon. So why? It's continually investing in building its moat around the business. So yeah, literally a bit of a funny one. It doesn't actually spend $130 billion on sheds, but it's definitely building its infrastructure of its large Amazon fulfillment services business and other things like that. So because of that, and because of that diligence to sticking with their strategy that has worked for over 20 years, and the fact that the CEO that's come in the last 5 years has proven that he's sticking to that strategy and pushing forward on it, is the reason why I think that's the business I'd want to be marrying long term. There's a lot of other ones here that are quite interesting to have a look at as well, but Amazon's the most compelling for me. Now, which one is the one that is DTF? So my pick for that is eeny, meeny, miny, moe. No, it's Helios. So Helios is an Australian stock. Came across it from Ron Shamgar. He's a investor in Australia that works for a fund. He's done really well, and he's been putting a couple of these other businesses that they've invested in, and I came across it from that. So I had a look at it, and it is a value play. Currently, it's making about 200 million in cash, but it's priced at $250 million by the marketplace. So that is a huge difference. Just to put it in perspective, Apple, Amazon, and things like that are worth priced in the marketplace for the whole business worth trillions, but they make 100 billion in cash. So it's, as a ratio, it's probably about 15 to 20 times what that's worth. So Helios at the moment is definitely undervalued by the market. Why? Well, they've gone through a bit of a restructure. Their earnings and net income at the end of the day is negative. But looking at that, it's all these non-cash charges, impairments, and sales and things like that have come back out of the business. But having a look at the financial statements, it actually shows that the business is making cash and it's consistent. Revenues are actually growing, and they've portioned off part of a part of the business that they didn't want, and they've gotten rid of it now. But they've still got those negative parts sitting on their balance sheets. So to me, it looks like the most compelling to get involved with, especially in a short-term play. Growth for long-term prospects doesn't look like it, but in terms of the price to earnings ratio going from very low to back to an ordinary kind of state is very high. And so what we call multiple expansion. So that's the most compelling one for me. I will be looking into it further this week, doing a deep dive and a valuation of it, and going from there. So if you guys have enjoyed these during the week, or you just like this weekly one, feel free to subscribe. Let's have a look at that in the meantime as well. How have I gone for the week? So I've published 3 videos every day, so 3 reviews up to 21. Daily subs, I didn't expect much for this week. It's pretty much just about being consistent, getting the videos out there, and as I continue to do that, we will build our crew of audience members, you guys. Now, our community currently has 31 members in it. It's our free stock investing legends, and it goes through and has all the resources that I wish I had when I was first starting out. Put those in there for you guys to be able to utilize and do everything I've done, but learn them quicker. All right, so feel free to click on that link. It's in the description below. And as we go through during the week, I'll be updating this and tracking it as we go along. Now, if there's any questions you guys have, any comments, feel free to hit me up in any of the comments on the videos. If there's anything you guys want to see, any stocks that you've got that you're looking at, that you're interested in and want to let me do a review on, feel free to drop that below as well. I appreciate that. And I know that our crew of future audience members will as well. Now, if there's anything else, otherwise, have a great day and click on this next video because YouTube reckons you'll like it. Cheers.